Gold just passed $2,000 an ounce, setting the stage for a historic new bull run. Multiple billionaire investors are loading up on gold, including hedge fund founder Ray Dalio and real estate mogul Sam Zell, meaning now is the time to own gold. One precious metals expert is stepping forward with a big prediction. He believes we could see gold reach as high as $3,000 by the end of the year, possibly higher. So find out why and get instant access to his #1 gold investment for 2022. It's not bullion, an ETF, or a mining stock. In the past, folks using the same gold strategy could have been able to make nearly 50 times their initial investment. Considering how quickly the price of gold has been moving, you don't want to waste any time missing out on the gains he believes are in store for this investment. So to get a copy of his new free report with all the details, simply go to 2022goldmania.com. Again, that's 2022goldmania.com for a free copy of his new report. Hi, this is Daniela Cambone, and welcome back to Stansberry Research with a very important conversation today, because my next guest says that the current conflict in Ukraine really has more to do with it being a banker's war. He says that it will be a battle over who will control the next financial system. Here to talk about this today is David Morgan of the morganreport.com. David, thank you so much for joining us. I know once again, I've caught you off guard. You've decided to come on from your phone in the middle of a show in Las Vegas. So thank you.
Well, my pleasure, Daniela. Thanks for asking me.
So, David, I read your latest report with a lot of interest, and obviously my eyebrows really went up when I read your words about how this is a banker's war, truly, and how you think this will lead to the creation of a new financial system. So, what do you mean by that?
Correct, Daniela. The idea is that all wars are bankers' wars. Came from a documentary by Michael Rivero, and banks have notoriously funded both sides of the war. You can go back to medieval times and see that the bank funded the king for the war. So the idea is sound. And then if you go to the next step, is this war a war over Ukraine and Russia? Obviously it is. But is it deeper than that? Is it about the new monetary system? And with a lot of talk about gold being used as a means of settlement for natural resources in Russia, like oil and natural gas, if that is to come about, then we started to reset based on some type of gold. Certainly you can't rule that out. So a lot going on beyond just this conflict, which is horrible in a lot of ways, but nonetheless, it's there, and it could be ended soon, but it won't be. It's more than just Ukraine and Russia and NATO. It's a lot more. It's about resetting the financial system. That's the bottom line.
Let's look at the sanctions, okay? So yes, as you say, the sanctions are here. The repercussions will be felt. The concern is that it will force countries to look for alternatives outside of the U.S. dollar, right? So my question to you is, and I've asked this to other experts if people have watched other episodes, is why would the U.S. risk the U.S. dollar no longer being the reserve currency here?
Yeah. Well, I don't think it's a question of the U.S. risking it. I think it's an eventuality, and they know it. They, meaning the top tier Bank of International Settlements, the Fed knows it, and they can only run this type of a system, a debt-based monetary system, for so long and it fails. There's 91 countries that are looking at a central bank digital currencies, and there's 9 that have implemented. China's being the lead, and China has 100 million people using their central bank digital currency currently. And the problem with it is several-fold, in my view, as a libertarian type thinker, is that you have no privacy at all. Every transaction that you do is monitored, and that being a concern. But what's more of a concern is that there's a social credit score put on top of the digital currency, which means that if you don't salute and say 3 bags full and go along with the political ideology that comes from the top down, then you could be penalized regardless of how much money is in your account. And that's the major problem that I see, is that money's always been controlled, but now it's but with some leeway. But now there's no leeway. You can't use cash.
Okay, so the paths are leading to some form of a digital currency. So do you think it's coincidence that we're now at the exact same moment seeing executive orders and mandates come out, uh, and in it there is talk of a coming Federal Reserve digital dollar?
No, it's par for the course as far as I am concerned. I mean, how far along they are, I'm not certain. I have looked into this fairly deeply. There is some talk of going on the back of, let's say, an XRP or some other currency that's out there now that's functioning well and has been basically tested, and then putting a CBDC on top of that. That certainly could be achieved. And if it were, it could expedite how quickly this comes to the fore. I think before we get to this all out digital currency, you need to implement a digital ID system, which means it's basically your DNA proves that you are you, that's your identity, and that goes into the system. And with that, you're guaranteed that you are who you say you are on the internet and all your financial transactions. And to implement that, I am thinking that there could be some type of cyber attack, which we're already being told could happen with the cyber polygon that the WEF performed a couple of times. So we could have some kind of a cyber interference from the Russians. And then all of a sudden, we all are dependent on the internet. And to make sure the internet is safe and clean and everyone is who they say they are, we're going to implement this digital ID that absolutely guarantees who you are. And that is hooked to your central bank digital currency, and basically have a top-down control system that you either participate in or you don't. I think that's the big goal. Are we going to get there or not remains to be determined.
So who's pushing that narrative in your opinion then, David, if your theory is correct? Is it a few central banks? Is it all central banks in unison? What does that look like for you?
Yeah, it's a tough one. For me, it looks like it's, the WEF is easy to point to. You go to the Davos, you look at what Klaus Schwab has done with this school for, young leaders, and you see how many of these young leaders are actually leading countries, and that the dictates of these people are not in line with a democratic attitude whatsoever. So I think a lot of it stems from there. And you look who's behind Schwab. I mean, one of my viewers sent me a book he wrote, and he talks about how Schwab is tied to the Rothschilds. So there's a lot behind the WEF. That's not the top dog. That's the front face, but they're very explicit on what they want to do. If you read Schwab's book and you listen to the lectures, and then you have the prophet, the guy from Silicon Valley, I forget his name. He's from Israel, a brilliant man, but a little off in my opinion. But he's got these ideas about how you can hack the inside of a human being, how you basically can control them with the technology that we now have, how you can mitigate their thinking into be in line with what I'll call the status quo from the top down. So it's a lot of things that really, really, really upset me. And yet you don't hear a lot about it. You don't hear anything about it in the mainstream.
And I think the reason that your past videos have resonated with the folks is because, if you look at your track record, I mean, you're a very level-headed man. I've known you for a long time. You're not a conspiracy theorist. You're a real economist, historian. And so to hear you, say certain things is alarming.
Right. I mean, you go back to our previous interview about the ownership idea of money. I said, look, get your money out of the bank. There could be a bail-in. So if you get your physical currency, you've got a buffer. So there's something to, personal freedom depends on actually free money. But most people don't see it that way. I think it's implicit that if you have a free money, then you have a free society. If you don't, you have controlled money, you have a controlled society.
Exactly. You spoke about the bail-in before this situation, and we see, how the folks were scrambling to get access to capital in Ukraine, and looking, and gold, silver, and crypto was a lifeline for many of these folks. On the point of Bitcoin, you say that Bitcoin has been hijacked by various banking interests. The banking elite want a central bank digital currency, as you say, that they can control. So what do you mean by being hijacked?
Well, the one thing that's a meme that continues and is valid is the disparity between incomes on a global basis. If you look at the elite, the 1% or less that holds, I forget the number, 50% of the global wealth, and then the other 99% hold the other half. I mean, it's a huge distortion. And that's a metaphor and an analogy to Bitcoin. Bitcoin, I think, in the white paper, started off with a great idealism. But if you look at the present day, basically a lot of the top dogs are associated with MasterCard, and they are big holders. They own most of it. So whenever you own the main body of something, you are in control. I mean, if you owned 90% of the silver market, you'd be in control of the silver market. If you owned, 90% or if even 55% of the oil market, you'd be in charge of the oil market. And it's the same thing with Bitcoin or Ethereum or any of them. It depends what the ownership ratio looks like. Unfortunately, Bitcoin has been hijacked. The whales own it.
Do you feel this is correlated to price, that the price pressure Bitcoin's been on? I mean, apart from this recent rally as we speak, is that what's behind it for you?
That is the big question. It's all about Tether, and Tether has got issues, and no one really knows what's going on with Tether. Now, we have conjectured that they may be tied to Evergrande, and if so, then some of that paper is not worth much. And so as long as Tether can print indiscriminately, they can send a Bitcoin price basically wherever they want to. But once it's discovered that Tether really is a Federal Reserve in disguise and just printing money out of thin air, if that's the case, and many believe it is, then Bitcoin's got a problem going forward.
Let's talk about gold, because you could see it returning in some form to the monetary system. Is this part of what the new financial system looks like for you? What role does gold play?
That's the toughest question you've asked. So one, it's a yes, no answer. Yes, if Putin or Russia is serious about making a tie to gold to settle in oil for gold, if that actually takes place day after day, week after week, month after month, and that trade solidifies, obviously we've answered our own question. Gold is back as really one of the most important parts of the monetary system. If, on the other hand, it's done synthetically or it's done as a proxy, then we have to wait and see. My idea before recent times was that the central bank digital currencies would be unbacked using modern money theory, unlimited printing, and they do a reset on the debt structure so that the debt basically goes away. And that would be the starting point of the new system. I don't think that gold's going to come in immediately, but I could be wrong based on what I just said previously. If Russia really goes to gold, they start settling in gold, then they are, making a new monetary system based on some type of a gold exchange rate.
Just to clarify, are you saying you were going to see Russia liquefying some of their gold here to get some cash and get out of this mess, or are they looking at hoard gold as much as possible here?
Well, the latest news that I've had is that they want to set a floor on the gold price, and the floor is something around 1750 US equivalent, meaning I think it's 5,000 rubles for so much gold. And that was a really smart way to do it. What you really want is to have a stable currency. There's nothing more stable than an ounce of gold. It never changes. What changes is the value of it. So you have to make the value basically a baseline, and it can increase from there. And this is what the proposal is. So it's not about gold getting sold to buy foreign currencies. It's about gold being used as the monetary asset of last resort or final settlement.
Let's talk silver now. You say the silver to gold ratio could probably reach 15-1 in a breakdown scenario. Silver is constrained compared with gold because banks do not consider it to be money. You've been talking about a great silver crisis since 2020 here. Are we edging closer to that?
We are. I just did my whole presentation here in Las Vegas on silver. That's what they asked me to do. And I put up a best case scenario for technology going forward to 2030. And based on Matt Watson's work and the amount of input we get through what's going on technologically, there really is not a way to get that much silver out of the ground 10 years out. So from a legacy perspective, something you could go out 10 years and buy now, it's the most undervalued asset. 10 years from now, theoretically, we don't have enough to meet industrial demand, let alone silverware, jewelry, or investment demand. So I think the trajectory as it stands today is very, very favorable to silver. And since it is money in most South American or Latin-based countries, and it is used on the internet as or digital currencies as money as well, I think you're going to see more and more pressure for it monetarily. Let's just go one step further. This is a recent thought of mine. If you look at what Putin did with gold, and we just discussed, think about Mexico being number 1 or 2 producer of silver, and with their new president, maybe they will have an idea using silver as a means of final payment, right? I mean, if silver was proportional to gold in the historic ratio, you said 15-1, and it was like 4 times what it is now or 5 times, you would have maybe a better monetary base to make trade with. So very interesting times. The monetary system is collapsing. A new one needs to come about. And the biggest question to me is it going to be where we, the people, have control of our money, or are the banks going to have such control that we basically have to bend the knee to them to do anything?
Which direction do you think it's going to go? What's your gut feeling?
Oh, I know what direction they want it to go. They want, the complete control. I think there'll be a battle. And I do think that they'll be less rigorous, but I'm not sure. No one really knows.
So you don't think people will be complacent? You don't think they'll buy into the digital dollar? You think there'll be a revolt?
Very small percentage. I mean, there's a science fiction book a friend of mine wrote called Highland, and it talks about the vast majority will just go along with it. There'll just be a real subset that doesn't want to do this.
And will they have enough voice or power to do anything about it?
No, they won't. They'll have to go out into the countryside and start living a rural type of a lifestyle.
A little bit more on silver here. We saw what happened to the nickel market. LME had to shut it down. Do you see that happening with silver or gold?
I do. I think it's a great template for what really goes on in these paper markets. And I think it was a big wake-up call to many people that were, let's say, more establishment than I am, that said, oh, come on, it's a bunch of hocus pocus. And now it's in there, right in front of them. And because of that fact, I think a lot of people are waking up. I can see some of these bigger funds moving their silver out of the facilities that they now have into a private vault where they really know they own it.
So, David, I have to ask you this question. If not, the people will revolt in the comment section. If this is the reality that you see coming, then has that changed your forecast? And you weren't even that bullish on silver last time we spoke, and that's to my point that you're not this like rah type spokesperson for silver. But has that since changed your long-term forecast for silver and gold?
It has not. I still think, you're going to see the thousands for gold. I mean, 3,000 be a minimum of mine. I think 3 to 5 is the most likely. And then silver will play catch up, but I don't think the ratio is going to get back to 15-1. I think it's more like 30-1, which means silver outperformed gold on about a 200% basis. So in other words, if gold doubles, silver will quadruple. I think all people should own both. I wouldn't be a silver only investor at this time. There are people that will, of course, but I do believe that gold will probably be implemented in the new system. Silver, I doubt.
Finally, David, there's one quote that really resonated with me in one of your recent pennings, because feel like I've been saying this for a long time, that people have been losing the sense of what money really is. And you say we've reached that point. We're at a point where the more you print, the worse it gets. People trust the money or the currency less and less and becomes worthless. Then it is perceived as becoming worthless. That's what you see, greater demand than we're already seeing. We're just seeing the precursor to what will unfold. What will unfold?
Well, it's a crack-up boom outlined by von Mises. People will realize, look, this dollar isn't going to buy me much going a week out or a month from now. So I'm going to buy more tuna fish, gasoline, put it in a 5-gallon tank. I'm going to spend it. So that creates a velocity of money that increases. It's a turnover of money, and it's a psychology. I think inflation is based more on psychology than how much money's been printed. Once people believe that their dollar isn't going to buy them very much, they're going to spend as much as they can to get whatever they can now instead of in the future. That's called the crack-up boom. That's where we're heading right now. And of course, there's a lot of countervailing forces with the bond market, with interest rates going up and bond prices coming down. That's highly deflationary, but there's so much excess capital in the world that doesn't know where to go, that a lot of it will filter into the precious metals because it is the money of last resort. And gold is an anchor of the monetary universe. It has always been that way on this planet, and I think it will remain that way for quite some time.
So where do you fit on the inflation scale then, David? Because we have some folks coming on saying we're going to see peak inflation this year. Others saying, no, we'll continue running at these levels. Where are you?
Yeah, well, I'm going to get all my Austrian friends really mad at me, but I think they're both. I think you're going to see inflation in what we need, energy and food. And you're going to see deflation in stuff we don't need, like the next iPhone or bigger big screen TV or that type of thing. So you're going to see some places, like even automobiles that are extremely expensive right now. The used auto market is on fire, but I think that will subside. Anything that's based on credit, which is a lot of the housing and commercial buildings, automobiles, that type of thing, I think will be deflationary at some point in the future. But I think the food and energy crisis is so bad that will continue even in a countervailing deflation. Most people have no idea what the bond market is. They don't know how the credit system works. They don't understand the stock market. They never put a dime into it. This is the vast majority of people. And so all they see is that food costs more and gas costs more, and that's all they know. And they're going to project that into the future. So there'll be a rush to get out of that. And if anyone has any extra money, then they'll put it in something safe that they understand. And that's the gold market.
So I guess my final question, if that is the gold market, speaking so bullishly of gold, then why wouldn't it be higher than 3,000?
Because I'm conservative. I mean, there is a absolute paper price of gold. You take the amount that the Treasury purportedly states, 265 million ounces, you divide it by the monetary base, M0, and you come out with $15,000 an ounce. So my 3,000 is quite conservative relative to the amount of paper there is that's been printed relative to the amount of gold that the U.S. states they own.
All right, fair enough. David, I feel like I always catch you at the worst moments, either from your car, and now you interrupted your presentation at the show in Las Vegas. But what can I say? I appreciate your thoughts. This is a really important conversation, and I hope you come back on so we can continue more of it.
Well, thank you. If I might take another minute, just re-emphasize our previous interview where I talked about the ownership theory of money. If you don't hold it, you don't own it. And that's the idea. You got to own your gold and silver. You have to own some currency. Having currency outside of an ATM when all your neighbors rushing to the ATM and it's running out of cash, you've already put some aside. So it sounds old school. It is, but it's also real.
No, and I appreciate that you're taking the time to do that public service announcement, David. I know you really care about the folks out there. I've known you for a long time, and I appreciate you saying that. David Morgan of the Morgan Report. Come back anytime.
Thank you.
And thank you all for watching. We'll have much more coming your way, so be sure to stay tuned to Stansberry Research, and don't forget to stay on top of all the videos by signing up at danielacambone.com. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.